Hi everyone and welcome back to the channel. Today's video is episode 3 in our tax tips and investing series. In our last video, we explained how tax brackets work and how different types of income are taxed, using Steve and John as an example who earn $50,000 and $110,000 a year. In today's video, we're working with Steve and John again to show you how RSPs will not only help to lower your taxes, but also increase the amount you can get in government benefits. Let's start by covering the basics of how RRSPs work. Simply put, when you deposit money into an RRSP, anything you put in reduces your taxable income. In Steve's case, he makes $50,000 a year. So if Steve were to put 10% of what he makes into an RSP account, he would only have to pay income tax on $45,000 instead of the $50,000 that he made. Putting your savings into an RSP not only reduces the amount of tax you have to pay, but for some individuals, it can also increase the amount of benefits that you can qualify for through the government. So how much of a difference would a $5,000 deposit make for Steve? Let's take a closer look. As we learned earlier in this series, Steve lives and works in Ontario, makes $50,000 a year, and has 2 children. He does not have a pension at work, so he tries his best to save 10% of what he makes each year for retirement. Without putting any money into his RSP, he would owe about this much in income tax and would receive about this much in government benefits. How would this have changed, though, if Steve had put his $5,000 of savings into an RSP account? His taxes owing would have been reduced, and the amount of benefits he would qualify for would have increased, as you can see here. There's a misconception that RRSPs are only advantageous for those at higher income levels. However, many government benefits are income tested, meaning the more money that you make, the less money that you will receive in government benefits. This is something that is often overlooked when it comes to RSPs on top of the benefit of income tax savings when you're trying to figure out where you should keep your savings. When Steve applies for his benefits, he's now applying to someone who makes $45,000 a year, not someone earning $50,000. Now let's take a look at John, who's at a higher income level. How would RSPs benefit him? Like Steve, John also works and lives in Ontario and has 2 children. In this case, he makes $110,000 a year. Without an RSP deposit, John would owe about this much in taxes and would receive about this much in government benefits. At John's current income level, he is not eligible for either the GST credit or the Trillium benefit. And as you can see, his eligibility for the Canada Child benefit is far less because he earns so much more. Now, assuming John also puts 10% of what he earns in an RSP account, his income taxes owing would now be reduced to this. Not only will John save on income tax by using an RSP to save for retirement, but his benefits will also increase as he'll be applying to someone who makes $99,000 a year instead of $110,000. In both cases, we can see how using an RSP to save for retirement can both lower income taxes while you're working and also increase your eligibility for government benefits. You might have concerns about using an RSP since you're saving money not intended to be accessed until many years from now. RSPs, though, are accessible prior to retirement if you really need to access the money sooner. In fact, there are some reasons why it's sometimes advantageous to cash out your RSP before you retire. If you haven't had a chance to already, we have a brief video that goes through some examples of when cashing out your RSP might actually make some sense. Follow along in this series as we show you what retirement could look like for both Steve and John. We'll explain to you how to figure out how much you should be saving, show you how to find investments that you're comfortable with, learn some strategies to reduce your taxes, and show you some programs that you can apply for to help you save for your child's education. So stay tuned, thank you so much for watching, and we'll see you next time.